Hello, Internet. This is Boris Schlossberg. Welcome to the Trading Battle, and we are covering the hottest subject in trading that I've ever seen in my life. We're continuing to cover the subject of prop trading. Last week, we had an enormous response to our first show on prop trading, and this week I have even better guests. I am very, very privileged to have Blake Olson and Andrew Lockwood to talk prop trading with us. Blake probably needs no introduction. You've seen his face. If you're at all interested in prop trading, he's so famous, he's internet famous. He runs a very, very popular YouTube channel, basically the Trade Connect VVS. What is it, Blake? Is it Trade Connect?
It's Trade Connect VVS.
VVS, it is correct. Okay, sorry. I just wanted to make sure that's correct. Amazingly interesting wealth of information about a variety of prop trading firms. He interviews a lot of the owners, talks to traders, talks about his own experiences. Really, really superb piece of content there. I highly recommend if you guys are interested in the subject to go visit his YouTube space. And Andrew, of course, is a man who needs no introduction because look at the screens he has behind him. I mean, you could tell he's the biggest trader in the room here just by that. Andrew, of course, has been trading longer than most of you have been alive, and he brings that wealth of knowledge every single day to his own room, and he works now with City Traders, also helping people get prop trading accounts and get funded. So welcome, gentlemen. Nice to see you aboard. Andrew, how are you?
I'm very good. I'm certainly the biggest trader in this room. I don't know about that room, but certainly in this room.
I mean, look at my puny, double monitor relative to your 6. That already shows.
Well, you know what they say, Boris. All the gear, no ideas. So maybe there's something in that. I don't know. But anyway, great to be here. Great to be invited. Thank you to yourselves and obviously ACAT for sponsoring the Trading Battle event. Great to be back in front of the cameras, and delighted also to be meeting Blake as well for the first time. So,
yes,
all good.
I think both of us are, and we're going to kick off the show with our first question of the day, and we're going to go to Blake on this. Do prop firms hold you accountable for your day trading habits? Like, in other words, do you think that going through the prop firm route, you actually become a better trader?
I think it really depends on the particular prop firm that you decide to go with, because there's some out there that, of course, as we all know, have turned out to become scams or other issues that come up with these prop firms, or hidden rules or other things like that. And that can really give a bad taste in the trader's mouth. And that can really lead to actually hurting you long-term for trading, where it would have been better had you not done that at all. However, for most prop firms, I think that actually is beneficial because it teaches you risk management. You can only lose a certain amount of your account for a daily loss limit as well as a total loss limit. And these things are really empowering to the trader and actually helps traders succeed in the long term by by engraving those very good trading habits from the very beginning.
I agree. I actually, I would say they don't go far enough sometimes. Like in on the institutional side, the prop limits, and Andrew, chime in on this after I finish. On the institutional side, the prop limits are often like 2% a day. That's it. Like, that's all you can do if you're prop trading, which forces you to trade either really small or really get far ahead in a day before you could really ramp up. Most of the retail prop firms pretty much stop you out on a 4% daily trade limit. So they kind of really give you a lot more leeway than even the professional ones. But regardless, the very fact that they stop you from trading and give you a pause, I think, is a super valuable thing, because I don't know how many retail traders Andrew and I have seen, including, by the way, yours truly. I've done this a million times, where we've taken a 0.5% loss and turned into a 50% drawdown in the account in a matter of 48 hours. No problem. Euro pound. Hello, my old friend. All been there, done that, right? So, what do you think, Andrew? Do you think?
Well, I think the obvious answer is they should do. They should make you be more controlled and more disciplined. But I really do think that it depends on the trader themselves. A lot of the props, as Blake was saying, are out there just to get you. They're scams. Some really good props out there. But the guy that's coming in to take the prop challenges, I would like to call them assessments, but take the challenges or assessments. They're told they got to use stops, or they get their accounts closed down. They're told they got to manage risk. They're not allowed drawdowns and all that. That doesn't necessarily mean that they will do it, because I've seen over the years, certainly as the prop space has taken off over the last, say, 5 or 6 years or so, traders there's two types of traders. There's traders that come into this because they just want to gamble and have a big shot at a big payday. And there's traders that want to come in and be long-term traders that want to actually tell their boss to jump in that proverbial lake, as I always say. So I think it really does depend on the trader. They should do. They should control you. You are accountable. But at the end of the day, you can drop $500 into your own trading account and blow that, or you can drop $500 into a trading assessment and blow that. It should do, but it doesn't always work,
Yeah, that actually brings me up to the second question. But before we get to the second question, I want to just pursue this for one more second. The interesting thing I think about, holding you accountable is there's a whole bunch of different prop trading rules. And Blake, speak to that. There are some prop firms that don't have any time limit. Other ones that have time limit and then a double gauntlet. So in other words, you got to pass one and you got to pass another one. And I wonder, how you feel about those I have my own personal view that I think obviously the no time limit ones is probably the most proper way to offer a deal, because the more pressure you're forcing the trader if you put a time limit on the gauntlet, you're forcing the trader to trade the time, not the market, right? I
totally get that's so true in our trading community. The people I've met, and they've been doing the challenges, and obviously, the gold standard out there that we all know and what have you. They've got time limits on their trading, and people are saying in the room, I've got 2 days, I'm up, up to 1% to go 2%. So naturally, they have to take trades that don't comply with their strategy. They've got to do it for that time. And for me, I don't want anyone, trading my money, if you like, with those false sort of trading signals and so forth. I mean, prop firm business has been going around for many, many years. When I was in the city all those years ago, and you had all those locals, prop firm business was there. You had people, rich locals or independent traders, funding other traders. There's no way, that would have existed in those days where you have someone saying, you've got to make the money by the end of the bell at 4 o'clock. It wouldn't happen.
It's not like making donuts. I know. It's not like making donuts. Markets, don't accommodate sometimes. What do you think, Blake?
Yeah, I think that the time limits, of course, are beneficial to the trader. However, I think that some prop firms are really interested in a specific type of trader. And it really determines on, it's all dependent on what is the proprietary trading strategy of the proprietary trading firm. And that's really what it all boils down to. And some are able to have that, while others also require stop losses. Others also require real low leverage. All these other things. Blake, it all depends on.
Sorry to interrupt you there, Blake. Are you saying? Sorry to interrupt you, Blake. Are you saying that you think it's good for the trader to have the time limit, that he's got to make the trade in, he's got to make the target or the assessment percentage in a certain period of time? Do you think that's good for the trader?
No, he's saying it's good for the firm because the firm is seeking that type of trader. He's saying that some firms are looking for high frequency traders. Guys who are going to just take guys like me who are going to trade the 1 minute chart endlessly. And if you're, I would say even I would prefer much more not to have a time limit, because even my high frequency, because of you want to control your drawdown, my high frequency may only take 2 or 3 months before I can make 10%. The basic firm proposition, I think we all agree, is 10% up, 5% down. That's pretty much every formula I look at. It's a tiny variation of that. Would you agree, Blake?
Yeah, I'd agree. But however, for these firms that do have the time limits, usually what ends up happening is if it's not a hard rule or it's a soft rule, where if you break it, it's not the biggest deal. Usually you get a free retry. And we've been seeing a lot more firms be coming out with unlimited free retries as well, which I think is definitely the move. I don't think you should be limited on the amount of tries. If you keep being profitable, there's no reason to stop someone from continuing trying to win.
So that's interesting. Like on those free retries, because there's so many different permutations of this flavor here. If let's say you get up to 9%, time runs out, do these firms then say, okay, all you need to do is make 1%, or they start you at 0 and they want you to see you make 10% in the next 30 days? How does that work usually on these offers?
Usually, what would happen in that situation is that they would have to restart you back from 0, meaning you need another 10%. Okay. However, what I really recommend at that point is if you only have 1 more percent, may as well just risk it and have one more day of a higher risk than usual, just to see if you can pass the prop firm in that little 1 more percent gain. So you're already so close. It shouldn't be really a big deal in terms of you passing or not, because you have essentially a 9% drawdown to get 1 more percent. You can do that. You should be able to do that on any day if you're a decent trader.
So what do you think, like some firms, want higher frequency traders, and others are much more relaxed on their trader pool. What's the attraction of having a higher frequency trader
Well, I think that comes down to the business model of the prop firm. To be honest, we all know that a lot of the prop firms out there are basically surviving on the back of failed assessments and retries and so
Right.
forth. We do that. That's the business model for a number of them out there. And I think high frequency trading. And I know I've seen some very successful high frequency traders. I was one in the trading pits all those years ago. I haven't seen many high frequency traders trading prop that actually make it past maybe the second month of an assessment. They might pass the assessment, they might get funded, they might get a payout, but are they going to be in the game for long haul? I don't know. Blake's maybe seen more of those out there than me, but I've seen quite a few fail once they've just maybe had 1 month payout, and they generally are the high frequency traders as opposed to the more sort of the disciplined approach. I don't know. Blake might have an opinion on that as well.
Yeah, building off of what Andrew said is that a lot of prop firms unfortunately don't back any traders. They're a fee only model, whereas other companies such as the one I'm involved with the funded trader, with this one, what we do instead is we decide to back the really successful ones, and we do have traders that have had continuous months over months, more than 6 months even for a single trader of staying in with their funded account, just keep on racking it up, and it's great. It's great for both relationships and both parties involved.
So let's
Wait, are they high frequency, would you say, or are they more? I mean, are they more longer term?
It's a mix of both. Yeah, definitely both. Some long term, some high frequency.
So we constantly have this conversation. I think having two guys from the business, if you don't mind, let's summarize the basic models of prop trading. Right? There is, as you said, the fee only model, which is basically the prop pays out successful traders from the losses of the unsuccessful traders, and it generates all of its gross revenue from the fees raised on the assessments. That's one model. Another model is where they have a partial revenue from the fees, but then they also actually live fund the accounts, and they make money in two ways on that sense. They split the profits, and then there's a third way with some of the traders, some of the prop firms do, which is where they get they have such sophisticated analytics that they will actually copy trade their most successful traders and piggyback ride on that. So that's what leverage their profitable cycle. So those are like sort of the three ways that prop trading firms make their money. And there's all the various permutations of all that. But would you say that's a pretty accurate description of how people make money?
I would say so.
Okay.
Yeah,
right.
Yeah, I think so. But the other thing I would say on that is, and obviously anyone that's considering doing a prop assessment with a view to becoming a funded trader, as long as the company they're going with is established, they've done their due diligence, the customer shouldn't really be too bothered, I don't think, about the business model where they're coming from. I
agree. From a retail point of view, I couldn't care less if the company never placed any of my trades in the real marketplace. Absolutely. As long as I get paid out every single month. I mean, they want to play the game of demo trading all day long. I'm happy to do that. It really doesn't matter. The money needs to be real, not the.
But obviously, we've seen some big names. I mean, I saw Blake did a review on one of them a while back. One of the prop firms, and they were white labeling out and and obviously they stopped paying out because the fees weren't coming in. And
yes, that's always a danger. As we learned this weekend, and as I put out in my 5 points about prop trading, this point number 6, the most important one: take the money. Always get the payout and take the money on the first on the first of the week. Do not keep your money in the prop firm. So Andrew, you said something interesting. You said, would you rather spend $500? Anybody can put $500 into their account or put $500 into an assessment, and it's the same thing as far as just sort of gambling money away. That's true. But I actually think what happens, and this goes to our second question, most people put $5,000 of their own money and burn it, right? Whereas with a prop firm, you're really only going to put like $500 with us. Like in other words, your burn factor in many ways, I think, is much more modest on an assessment base because we're all greedy. Nobody expects at a $500 account to make any money in their own. So they usually drop $5,000 and they burn all of that right away. So would you say, Blake, the question is, what is the benefit of having a funded account versus a brokerage-based account?
That's actually a huge difference, and that's with if you have only a $500 or even a $5,000 account, you are so restricted on some of the more expensive commodities or indices in this case, such as the US 30. If you want even a single US 30 entry or anything, you have to have so much involved all front percentage of your account.
Yes, especially, and if you're still trading crypto, the margins on crypto are so low now because of the volatility.
Yeah.
You know, trading bit right now, you really do need a much larger notional account. And so that's actually a really good point. It's not just the fact that you burn less capital when you're doing an assessment versus your own money, but that you actually can have more flexibility in the instruments of choices because you have bigger notional accounts that you're trading with, notional value, right?
Right, and then usually you get leverage on top of that as well. Usually very, very aggressive leverage.
Right. Yeah. I mean,
about 200 I saw on the props. I tell you what, so on that note there, boys. I mean, you both make some good points. But you know, over the years I've been in the education space. You know, I've seen many traders come through the door, and I've seen many failures. You know, pretty much that we all know the statistics out there. And I really put it down to the number one reason why most are failing is because of they're underfunded. Because you know they have this vision, they want to be a trader, they don't like their jobs, they don't like their their current lifestyle. They want to be a trader. It's got the glamorous feel, it's got the glamorous look. So they want to be a trader. And they, even with a $5,000 account, now in that we always say a 5% monthly return is a really good monthly return. If you compound up 5%, it's 80%. I haven't just done that. I know that because I've used this line before, but it's about 80% on the year. It's a massive return. You put $5,000 in the account, you make 5%, you make $250. It doesn't even pay my internet bill.
Correct. And I think that's the problem is that to trade properly, they need to trade for pennies. It's like playing poker. It's like playing poker for nickels and pennies to trade it, to learn the game properly. But they all want to trade it for thousands of dollars. And having a small stub of a personal account is, like you said, basically it's always what happens is you're underfunded and over leveraged as a result of it. You're always going too large into one single trade takes you out. So you have these lottery ticket stories where a guy takes $5,000. He happens to be, I don't know, short Bitcoin the day FTX blows up. And there's a 20% move in one day his way, so that 5,000 turns into 50,000. Now he's got actually the right amount of nominal money to be able to trade carefully, and then from that point on, he builds himself. But that is literally, we all know.
There's people winning the lottery this weekend. There will be people won it last week. They are lottery tickets. Certainly at the City Traders here, we are trying to get people into the mindset of a City trader and trade for a living. I mean, and most people cannot trade for a living with a $5,000 startup float. So I think
actually it's a sort of a side question to this. Blake, what do you think is the reasonable notional account that somebody who wants to pass prop trading should trade with? Because obviously prop trading accounts come in flavors from anywhere from 25,000 to, let's say, $250,000. Some firms will even go up to $1 million. But let's just say like 80%, I think, of all, and you speak better than I do, but it seems to me 80%, basically your choice is 25,000 to $250,000. But it's expensive. The $250,000 is expensive to assess, and it's a lot of money. And actually, it's interesting. Here's an interesting thing. I found, and this is just my own personal, is that I trade 100,000 assessment perfectly. Million assessment was a freaking disaster. It was a demo money, but it was just a freaking disaster for me. I could not handle the the volatility.
Yeah,
so what do you think? What do you think, Blake? What do you think is the sweet spot there?
I have to agree with you about the $100,000 mark. I think it's such a great round number where it makes all the mental math really easy to handle. And that really, the mental aspect, as we all know, is a very huge part of trading. It definitely cannot be understated of how important the mental aspect is. And when you have such a round number to start off with, it makes everything much more easy to comprehend in your head. I think it's very, very beneficial. I also really appreciate when the firm allows you to have the full 10 or even more than 10, such as having like a 12% maximum loss as well. I think that's really great to have that extra room, so that you can lose all the normal amount of loss plus a little bit more and still be in the clear. I think these kind of things really help the trader a lot by having those like round numbers to deal with.
Yeah.
Yeah.
So speaking of that, by the way, what are some of the variances that you've seen on up to down? Like, as I said, 10 up, 5 down to me is the generic formula that a lot of people do. But what is the lowest performance to the highest drawdown that you've seen as ratios? Where are the extremes on that?
The highest
So the smaller, I've seen 8%. Like some firms will say you need to make 8%. On the other end of it, some firms I've seen are willing to let you lose 12% drawdown. Like what's the best and the worst that you've seen in this business?
I think 12 and 8 are the best of those each sides are the best of what I've seen. So an 8% requirement to pass phase 1 with a 12% max daily loss limit, I think is the absolute best that I've ever seen.
Have you ever seen?
I think what's really crucial on this, I think, as you said, 10, in fact, ours is 10 and 5. But there's variations. But I think what's important, and one of the most important rules is the trail, to allow someone to grow the account. So basically trailing off equity and not off balance. Trading off balance, not off equity. Equity is like open positions. So you're in an open position, it's going really well, and then it pulls back. You might be 7 or 8% up, but it pulls back, and all of a sudden you're locked out on a perfectly good trade, but you just gave back on a trail stop. So I think that's really important to grow the account over time, to have that rule, rather than just the 10% and the 5%. I mean, we will basically, once you get to 5% profit, your trade is locked in at break even, and you can trade that. You start with 100 grand, you can take that up to 200 grand. Move it back down to 100. Move that back down to 80 grand or whatever, and you're still not going to get locked out. So that I think is the most important thing.
Right. The volatility in equity versus, the volatility in open equity versus the volatility in balance is a key difference. It's a very good point. So our time is running short. I wanted to ask you our sort of final question of the show. We've all made tons of mistakes. We all certainly know a lot of mistakes that are going on. But Blake, you've seen thousands of traders, lots and lots of prop firms, probably seen 1,000 different prop firm trading statements, right? Give me your top 3 worst mistakes that prop traders make.
I would have to say that by far the biggest mistake that most traders make is that they assume that their stop loss will protect them if they do the math to figure out the exact best case. So if they have a 5% daily max loss limit on a prop firm, and they'll get down to like 4.99% and put to the stop loss right there, and then they assume there'll be no slippage or something. But that's how a lot of people will get caught out, because it'll actually touch that and have just a tiny bit of slippage and make you go over. And that's how I see a lot of people fail. Another way that I see it a lot is people either changing up their current strategy. I would say that's another huge one as well, is that you're so consistent with one strategy, but then it maybe starts to lose a little bit. And instead of continue losing, like, oh, the strategy sucks. Well, now I'm going to change up my strategy. And that's actually one of the worst things you can do based on the rule of averages. You want to stick with one strategy or a plethora of strategies. Just stay consistent, whatever it is, of something that is tested and works, and stay with that the whole time. And that's how you can be the most successful. The last thing I see that people try to do is, I actually made a video about this, of people who actually hire people to do their challenges for them. In my experience, they've been absolutely awful. And these don't work out.
We need to have a totally separate show on just that. I mean, just that is the most ridiculous thing I've ever heard of. But we definitely, I'm telling my producers right now on air that we definitely need to have a show on that, because that is a fascinating subject. But it's a subject really for almost like a whole new show of like proxies. It's like people who take your SATs for you. If you're an American, but or unit.
It just defeats the object. It just defeats. I mean, it's one of my. I mean, obviously we got the questions beforehand, so that was exactly one of mine. And obviously this industry, it does create from all the snake oil charlatans trying to push things and what have you. That has got to be. It just defeats the entire whole purpose of doing this. The whole purpose of doing this should be not to have a one-shot wonder, 1 month payout is for some people. But if you want to be a career trader, if you want to be a long-term trader, why would you pay someone else? Just go and, I mean, that's just total gambling. I think another mistake that I think difference between prop is people don't actually, because it's not their real money. They think it's not real money. They don't take it as seriously as they should be. And again, this comes down to the mental mindset and objectives of the guy that's coming in for the first time. Because it's not his money, he takes those unnecessary risks. He takes those things. He's going to hit some notional target. Whereas if it's your own money, you know, and you have got, say, 100 grand to put in the account, you're not going to be pushed into it. You're going to be more conscious of it because it is your own money. So I think people don't take it seriously as much as they would their own money.
You would think that's true, right? But there's actually a lot of interesting data that contradicts that. And I'll tell you why. Even though it's fake money, it's the risk parameters that what they found actually is that people who take prop trading seriously will keep their account longer than people who have their own capital at risk. Like, in other words, their burnout rate is actually much faster on your own money than it is on fake money. Sometimes you take fake money more seriously than you take your own money. You know, if you put under a very rigorous risk structure. People need risks, like I certainly need a risk structure. And that is a completely counterintuitive finding from somebody we had on the show before who runs a whole bunch of prop firms, and they did a whole bunch of analytics. And they actually found that traders who trade prop had better, longer market, staying techniques than traders who traded their own money. So
yeah, I get that. I mean, it makes total sense. But I was more sort of likening it to the rookie traders that are coming into the first time. They think they just drop it in $500 for an assessment. It's not really money. I'll just take it with a cavalier approach. And I was thinking about the people that are just trying to get past these challenges for their one-shot wonder of the month. I'm not talking about the successful.
Yeah, that's really the key, Andrew. That's really the key. I think, and I wonder if Blake would agree. There's really two types of traders. There's the lottery ticket winners who just are looking at this as like, oh, maybe if I drop $500, somebody's going to give me $500,000, and I'll be rich just on one single month of have a hunch, bet a bunch. And of course, those guys inevitably fail over and over and over again because they're chasing the rainbow. And then there's guys who really look at this as tuition, as like, it's like a course at a university, and I'm going to try this. And maybe on the first time I don't do well. Maybe I'll take a second time. Maybe I take a third time. But I'm really going to make this into an educational journey. Mm-hmm. Those guys tend to actually do much better, even if they don't necessarily pass ever. They go back to their own accounts and they trade much better. Would you say that's true, Blake?
I sure would. Yeah, I've definitely seen that personally in my own accounts from when I was trading on my own, and then I found prop firms, and then I went back to my own for a little while as well, and I traded way more, way better. I can personally test that for sure.
Yeah, I think it's interesting. I think we all need that structure, and sometimes the prop firms really do provide that really, really well. We're running out of time, guys. So, I wanted to just sort of ask you each, first of all, where can people find you? Andrew, you're obviously with City Traders. You said to me, you also run a room these days. What are you doing?
Yeah, so pretty much so. Our aim here at the City Traders is to get people funded, to get people to be a career trader, to be actually trading for a living. So we run a trading education program where we teach trading strategies, but we all know it's not all about strategy. It's more about the psychology as well. So we teach all the sort of the mechanics. It's got a community as well, like-minded traders. We're streaming live throughout the trading week. We're on about 4 times a day, just me and my co-founder.
Do you hop on and do you analyze the markets for them? Do you trade? What do you do in the end?
Yeah, we do all of the above. We analyze the markets. We're looking at trade setups. We're looking at this week, long Aussie dollar, and we're looking at the pound maybe weakening up this week as well. So we're talking about ideas, but we're very much conscientious of making sure people don't just follow my advice because I'm wrong just as much as I am right. Trading is not about always being right. It's about the process. So we basically try to drill that into people. And once we've sort of done the coaching and the mentoring, either collectively in the community, we provide the funding for people so people can take out I don't like calling them challenges because it sounds like a game. So we call them assessments.
Life is a game, Andrew.
Well, life is a game, but we call them assessments. So do the assessment, prove that you can trade. If you can't trade, we'll find out why you can't trade. We'll help you through it. We'll get you the coaching that you basically need so you don't fail the next one if that's the case. to get you through there. And if you pass at the end of it, then of course we will provide the funding for you as well. So basically, it's the one-stop shop, I think, for anyone that's really serious about wanting to be a trader and wanting to tell their boss to go and jump in that proverbial lake. You can, of course, follow us at the City Traders. This is the plug time, isn't it, Boris? Yeah.
Yes, you're doing a good job, Andrew.
Okay. City Traders, and obviously on all the socials as well. You can find us on Instagram, you can find us on Facebook, and find us on LinkedIn and so forth. Or you can just Google my name, or YouTube, my name. I'm still,
and you're still internet famous. Just all you got to do is
I still have 250,000 followers watching me every day. So, but just
exactly. You're the man. You are the man. Blake, I'm actually. I wanted to ask you one question before we go, which is, Andrew obviously is very FX focused because, that's where, he's been. And I think the whole prop trading business started with FX, right? But now there's just kind of a panoply of products. I'm just curious, what do you see as the shift? Like, where are people trading besides FX that's being very, very efficacious in terms of getting the prop accounts and then getting their payouts afterwards? What instruments are people trading?
It's actually a landslide for the other ones, and that's definitely going to be with the indices, mainly US 30 and NAS, SP 500, and then with commodities being gold. Many of those four. What
about stocks, Blake? I mean, are they getting involved in stocks these days?
I haven't seen too many traders take advantage of the stocks so far. I've kind of been a little bit more surprised about that. I'm a big stock fan myself. But I haven't seen as much of a push towards that so far. We might see a change in that going forward, though.
I think it's really hard. Stocks are very micro driven. So, unless you're trading Tesla or FB, and even there, it's just, and also if you're trading on a CFD basis, you're obviously, the spreads in stocks are going to be much like, I have seen it's amazing to me that US 30 now is one wide or two wide. I mean, that is so tight. NASDAQ is 1.5 wide. At a lot of the firms, that is just, if you're a day trader, that's unbelievably great spreads. And you're right. I mean, that's all I trade is US 30 and NASDAQ. It's interesting. But so you really think that these days you have this tectonic shift from pure FX to stock indices, some people trading gold, of course, and then, and oil, a smattering trading oil. But I think oil probably was a bigger story last year when it was really, really rocking. At this point, volatility is. It's basically wherever there's volatility, right?
Right.
Which is where people trade. So tell us, before I interrupted you, where can people find you? You obviously have, as I said, a superb YouTube channel for anybody who's interested in prop trading. But what else has gone on in your life?
Yeah, I mean, I just want to keep it short and simple. If you want to find out more about me, just go to my YouTube channel, Trade Connect VVS on YouTube, or search my name, Blake Olson. It should be one of the top results as well. I make about prop firm videos. That's the only subject to talk about on my channel. So you can just find out more information on there.
What does VVS stand for? I'm just really curious.
It's in terms of diamond quality, very, very slight. So it means like one step beneath perfection.
Okay. There, I bet nobody would have guessed that. I was like, I thought you were running a VPS for a second, but okay, VVS, new term. I will remember it very, very vividly. Anyways, gentlemen, it's been more than a pleasure. It's been a true joy to have you guys both. We definitely need to have you guys both again. This is a really fascinating subject. As I said, we have tremendous amount of interest from everybody across the world in this subject, and there's just so many more things to discuss. So I really do hope we have you guys back on. But in the meantime, this is Boris Schlossberg for the Trading Battle. I hope you guys really enjoyed this. We're coming back to you next week. Be sure to, of course, subscribe, like, and follow, as always, or just in general, just watch us. I wish you guys the best of luck, the best of trading. It's Boris Schlossberg, over and out.
Thanks, guys.